Greetings. This is Nigeria New Sustainability Economy NNSE Explainer Series on remodeling and re-engineering of Nnpcl for upstream exploration, production, and exports of lower carbon up to 4 million barrels of oil equivalents per day, delivering average annual foreign exchange earnings in excess of $200 billion to engender sustained fiscal surplus, subdued inflation, and accelerated economic growth in Nigeria. This is against the background of declining foreign exchange receipts from oil and gas exports and fast depletion of reserves. Foreign exchange receipts from oil and gas export pummelled down to $31.4 billion in 2020 from $56.6 billion in 2018. This steep decline was attributed to low oil prices, low production volume, and low aggregate demand arising from COVID-19 pandemic lockdown. After the COVID-19 opening up and the start of the Russia-Ukraine war in February 2022, rebound in demand and disruption in supplies resulted in oil and gas prices topping $100 barrels, creating income windfall for production countries and oil commodity trading houses. Nigeria largely missed out on this oil and gas income boom as production volume declined to less than 1 million barrels per day, below the OPEC's export quota. The reason alluded for our underperformance in the upstream were and are still syndicated crude oil theft, pipelines and terminals sabotage, insecurity, insurgency, and community unrest, restrictive OPEC plus export quota, global climate change, environmental degradation, activist movements against fossil fuel. The 2020 group audited financial statement of Nnpcl shows the changing business profile of the group. Revenue from petroleum product sales at 2.27 trillion naira constituted 62% of total revenues, as against 37% revenue contribution from the core upstream business of crude oil and natural gas sales. Gross profit was paltry at 64 billion naira. Juxtapose this anemic performance against 2022 results of Saudi Aramco and Brazil Petrobras. Aramco total revenue was $604 billion, out of which upstream constituted 70% at $419 billion. Petrobras total revenue was $124 billion, out of which exploration and production contributed 63% at $78 billion. Aramco total earnings before tax was $307 billion, as against upstream contribution of $291 billion, a whopping 95% value addition. In contrasting growth strategy, Nnpcl has been expanding low-margin downstream business with acquisition of former Oando retail stations yearly sold to OVH Energy. In compliance to local content regulations, the group has largely outsourced the management of its exploration and production concession fields under production sharing contracts and joint venture partnerships arrangements in land and swamp terrain, following the investment of the majors with mixed results. Behind the official narratives for declining crude oil and natural gas is the fundamental strategy shift of the majors in consortium to optimize to low carbon, low cost, huge capital, high margin, upstream, deep and ultra deep waters with giant fields that have capacity to produce average of 200,000 and 250,000 barrels of oil equivalents per day. There's increasing consensus among the international oil corporations, the international banks, and global institutional investors that Nigeria is becoming uncompetitive, unattractive, and unappealing for investment at scale and great value proposition in terms of alignment to global best practices, transparent and consistent fiscal regulatory legislation, climate change, net zero transition, environmental, social, and governance factors, and shareholding and governance reform of NNPCL. Meanwhile, Shell and Total Energies have made giant offshore discoveries in deep waters of Namibia with estimated 11 billion barrels reserves. Total Energies have accelerated operation in offshore Angola with production of 20,000 barrels per day in Combo field with reserves of 658 million barrels. The Nnpcl subsisting growth strategy of aggressive exploration and production in the frontier inland bases. The local content partners operatorship of exploration and production concessions, and the funding strategy of structured trade finance, short-term loan collateralized by forward sales of crude oil proceeds are at variance with global trends and opportunities. The future of performing state-owned oil corporation is predicated on government and minority institutional investor shareholding, diversified expertise and experienced board of directors, optimization to lower carbon, low cost and high margin upstream, deep and ultra deep waters, giant field exploration and production, alignment to net zero decarbonization transition, and corporate environmental social governance factor. This will require fundamental and structural pivot to global sustainability reforms and pathways to boosting foreign exchange inflows and generating fiscal surplus for accelerated stabilization and growth of the Nigerian economy. My name is Nnpcl Sanusi, Executive Secretary, Nigeria New Sustainability Economy, NNSE. Thank you.